Hello boys, it's your boy. I'm back again on my YouTube channel, and it's been a while, and I'm about to drop another video. So first of all, let me first say that I want to thank you all for viewing my content online and also watch it. And I pray that you guys find something important to learn in my content. So guys, a couple of weeks, you know, um, trading has been going on. You have been trading. A lot has been going on anyway. So this week we are going to start with USD Canadian dollar. Um, but if you can watch closely, if you're a trader and maybe the advanced trader, you're going to see that the currency pairs are not doing that good. You understand? There is no great movement. There's no yet a great movement for us to trade. Maybe mostly for swing traders, but I don't know. Maybe day traders and scalpers are going in and coming out of the market, but for we swing traders, the market has not been giving us what we want. So, but what we want to see on this, USD Canadian dollar is that, you can see that the market broke structure and we are waiting to see price will come back to the demand area and start, react from that demand area so that we can, you know, be able to hop in and buy. So, but before we do that, I want to make it so in the easy form whereby it can be beginner friendly. Anyone can understand what we're doing. So as a trader, if you come on your chart, what you want to do, you want to mark your high and low. You want to go on the higher time frame as much as the 1 month time frame for you to know actually where the price want to go. So what you want to do is that you have to mark your highs and low. So what we want to do is that on the monthly time frame, we want to mark our highs and low. So what we want to do right now is to mark our highs and low. Let's mark our highs and low. So we have this here. Now this. We have this. So you can see. So what we wanted is that okay, we mark. This is the support, another support here. So what we want to do right now is that we have marked this our all time high. You understand? This is our all time high here, and market has given us a little break. So what we want to see actually here is that we want to see price come back down to the demand area, and then we will see you know and divide to the top side. So as we have marked this our key area, this is our key areas. Anyway, this is the key areas that we have to mark. You see, we have resistance around this zone here. We have resistance, and so we will go on the lower time frame and see if price has given us something, a demand area around the zone. So let's go to the lower time frame. So on the lower time frame, this is resistance one, resistance two, resistance three, and we mark our key areas. This is where price is around the zone. Price has broken. This was the and over. You know, this is our the highest price of on the monthly time frame, and price did what break through it. So when price break through a particular support of resistance, we wait for price to come back to a supply and demand before we can try to um buy. You understand? So now we saw that price has break through a monthly resistance. So what we are expecting, we want price to come back to the demand area so that we can buy. So you can see that when this was our resistance area at the monthly, and we were finding where our demand is, and we can see that demand is around this zone here. It's around this zone. This is our demand area, right? So this is our demand. So we are waiting for price to come back to this area before we start buying. But for for that, we can still have there is maybe around 300 something pips for price to come in. So what we want to do is that we will first sell. We will have to sell around this zone here, sell from here to here before we start buying. So let's see. Let's go down to the lower time frame. Let's go down to the lower time frame. So on the lower time frame, what we want to do here is that price starts, selling down to the downside. And what we want to see that we want to see from this zone, the price will sell down to this area before we start seeing price buy. So what we want to see here, we saw that price came down around this zone, break this place. You understand? Break this place. So market came down, break this daily support. So when market break the daily support, what you want to do is that you want to wait for price to go back to the supply, the daily supply, and then come down. So what our anticipation is that we want to see something like this. We want to see something like this. That's what we want to see. So for the short time sale, we want to see price go to this area, and then we should see sell down before we start buying. So let me see how many pips. Okay, that's about 400 and 441 pip. That's about 441 pip. Let's see our pip risk. Let's see how many pips we got to risk. Let's see how many pips. We're risking 115 pips to get 440 something pips. So that may be like 1 to 3 or 1 to 2. So that's what we have on USDJPY. So guys, that's what we have. So the most important thing is that structure are one of the most important thing that you have to understand as a trader. You understand? You go to your higher time frame, you mark out your key areas. You understand? You mark out your key areas of supply and your high and low. And when you go down to you mark out your high and low. The next thing you want to be looking at, you want to be looking at the support and resistance, and then mark out those zones because sometimes price do well to respect those areas. You understand? So when you mark out for your key entry areas are supply and demand, you mark out your supply and demand and hope that when price come down to your supply or your demand, you are going to start selling or buying. You understand? Giving you a good confirmation before you start selling or buying. So that is what you want to be doing. So and as you can see that we also have a lot going on. You can also see that we have a lot going on, and if you go to maybe mm, let's go down to the 4 hour. So this is what we are hoping on the 4 hour, right? We are hoping that price will. So our hope right now is that price will come here to this area and then start selling. Mm. But our huge swing is is going to be around this, you know. So that is what we are expecting. We are expecting price to come here before we start you know start buying. So that is our take on USD Canadian dollar. And if we can go to some other pairs, maybe the SP 500, there is no yet confirmation. Yes, have some rejection. So let's look at let's look at let's look at SP 500. Or let's look at US 30. Let's look at US 30. Let's look at US 30. Let's go on US 30. Let's go on the higher time frame. I am a swing trader, so I will always go on higher time frame to predict where the price is going. So remember that I told you guys that as a trader, what you need is your high and low. You understand? You saw that price. This is your low. This is your high. Price came back here, went up, came back, went up, came back. So what you want to focus on? Okay, if a price open in a certain direction and close in a certain direction, you understand? What next do you want to find? It should be what you want to be talking about. You understand? Where am I going to find my other another entry? If price is trending to the top side and price close as a bullish candlestick, so what am I supposed to do at this moment? What you want to do at that moment? There are two things that price do. It open, it close, and then the next thing you want to be looking at, you want to be looking at your supply or demand. If it's a bullish market, you want to be looking at your demand areas. And now, where is my demand? Where are you going to find your demand area? The areas that you're going to be finding your demand area should be at Fibonacci 61, Fibonacci 50, or Fibonacci 38. These are the key zones whereby price do well to respect. So when you find those areas, these are areas that you should mark. Even though without having a Fibonacci, price will give you those good, demand areas. If you study price action and you understand candlestick pattern very well, you will have to understand it. When you see a market, a candlestick close, you will usually know how to identify those demand areas on your chart. So you could see that Around this zone, let me bring the chart close. Let me bring the chart close. Let it be. So we on the this is the week we have here, and price is doing what we see a massive sell from this week. You understand? Last week, price sell from trying to sell. You understand? You know, um, when we were expecting a price close around this zone last year. You understand? So what we were expecting, we expected that price. There are two things that we were expecting price to do. Is rather price come down to this demand area and start buying, or price should break above this high and then create a demand area for price to come back and then start buying. You understand? But price didn't do that. Price come back here. We thought price will come back to this zone and we start buying. But price came back here, respected this support area and start buying. And all we think that price will break this area. Price did not break this area. It start coming, start to sell down again. So what we are anticipating around this zone is that price has broken this. If you go down to the week to the daily time frame, you saw that price has broken there is any support area here. So what we are anticipating is that price should come back, maybe break this area to come back here before it start buying. But if price did not do that, what we are expecting is still expect price should go up again, you know, break this high properly and then give us a a demand area around any of this zone around this place before we can start, start selling at the moment, you understand? But if price did not do that, so what we anticipate price to start, start to come down. If price can come down and not respect this demand area, then it will become a sell. But what we anticipating is that price should go up, break this high, come back and then start buying. That is what we are anticipating. Maybe if you go down to your uh to your daily, let's say you're in a daily now, what the USDCAD is doing. So you can see the massive sell. Price can break this, break this area, and then we start seeing a massive sell. So what we are anticipating from me, what I'm anticipating price will still come down. You understand? Maybe price might come down to this area and then we start rejecting to the top side. We don't know, but let's just keep our eyes. There are two things we are anticipating. It's rather price, from here go back, break this, all-time high and then create a demand area for us to start buying. But if price doesn't don't do that, what we're anticipating is the price to come down from this zone and then start to buy. So that is what we have. And so even though you go to maybe last hundreds, it's the same thing. So there's no need. So you go to JPY, it's not good yet. Like it's a lot of losing tricks from that here because the market structure is not giving us what we want. So what I want you to stick on, you should stick on USD Canadian dollar. I think that market structure is quite good for a trader to look out for. So guys, so I'm not going to make this video tough. I'm not going to make it long. So that is what I have for you. Peace and love. Guys, keep on to watch and subscribe to my YouTube channel. Thank you guys. God will bless you all.